Hey everybody, what's up? We are back again with Lightbridge Corporation, courtesy of that comment. Never heard about this company. Very, very small market cap. Um, could be interesting. I believe they're down like over 10% today, but they're also coming off of a wild month where they were up double digits easily. I don't know the exact amount, but easily over 30, 40%. Um, so a little bit volatile. It's only about $100 million company. So I mean, kind of expecting some volatility, but I believe they make nuclear fuel devices. So that is something a little unique. I don't know, but we're going to get into their earnings recently, their financials, and then take a look at their chart and see what we can see. So make sure to comment if you have any companies that you want reviewed. Make sure to like the video if you want. Make sure to subscribe if you haven't, and let's get into it. So, Lightbridge Corporation development, next generation nuclear fuel technology. So, overall for the company, one thing to note here: market cap at 103 million, which is very, very low for a public company. But one thing to note is obviously with nuclear fuel technology, this company has an enormous amount of potential and upside that they could be seeing. Now, you can see their chart versus the S&P here. They are all the way down to right around $2-3, and now they're back up towards 10, actually right at 5. But they got close. They got close, to be fair. But overall, a little bit of suffering recently, had a bit of a comeback in the last few months. So let's get right into the financials. Cost of capital looks good. Target price is not there. I'm just going to give the credit for the target price and long-term growth rate only because the company is at a point where they aren't even big enough to have those yet. But so again, highlighting there the potential upside that they could have. But let's get into their income statement, see what we see. So overall, a big fat zero for sales. Now, one thing to note again, just based on what I'm seeing right now, this company is probably going to have a very low score on this financial report. Now, is that bad? Not necessarily. Only because, yeah, EPS are negative too. I'm just filling this out quick while I'm going through this, but the only reason this company is going to have a very bad report is because they are clearly next generation technology going through a ton of development. You can see all of their operating income is negative from SG&A expense, which is essentially research and development and then other things. So ton of money into research and development. So their income is negative. Now, while on this analysis that will look bad, overall that could be a huge potential upside kind of thing where we may be seeing some really, really strong growth and earnings in the future, but we won't know yet. So overall, they have a decent amount in cash. They've basically been bankrolling themselves, it looked like earlier, based on their total shares by just selling shares of the company, which could be good, could possibly be bad. Obviously, the stock price is going to have a lot of dilution. But overall, cash looks okay. No debt. No debt at all. Total assets are a little bit of a decrease in the past year, but overall strongly increasing. Short-term debt, literally zero. Long-term debt doesn't even exist on their balance sheet, which is really, really good. And then retained earnings is obviously going to be massively negative, which it is. So overall for the balance sheet, it is kind of crazy. Now, their assets are continuously increasing, which is good. Intangibles sitting at a very low number, but overall, I mean, they have a lot of assets. Now, all of those are current assets, to be fair, but I mean, that usually means it's going to be convertible to cash within a year or so, but could be converted further into long-term assets or something like that. But I believe what's happening here is it's mostly based on inventory. I think that's what's going on here, but I'm not sure because inventories could also be somewhere else. So overall for their balance sheet looks pretty all right. Let's get into the cash flows. I'm sure we're just going to see massive negatives here, which again, you should take this financial analysis kind of with a grain of salt. So overall, obviously cash flow is going to be a zero. Investing doesn't even exist. But one thing to actually note here is that they don't really have capital expenditures, which is good. And honestly, this really isn't that bad in general. So I'm actually going to give the credit here. Um, for financing cash flow, you could see obviously selling a lot of stock. Now, one thing again to note, they are selling less stock than they used to, which is pretty good. Um, Obviously, I still have to give that a zero, unfortunately, but overall, they're selling less stock than they used to, which is good. And then changing cash, obviously their free cash flow is very, very negative and actually growing more negative over the past year. So, not the greatest there. For their use of cash, it's most likely all going to be equity issuance, which is exactly what we're seeing. Debt, there's nothing to be seen unless you're going back many, many years, in which case they were just paying off interest expense, which is no big deal. So, looks good for the debt and pretty rough for the stock issuances. But again, it has been declining over the past 2 years. Maybe possibly they'll start to have some sales going. We'll have to see in the future. The ratios are most likely not going to be great. I'm sure the numbers here are going to be absolutely insane, which obviously they are because they have no sales. So 0, 0. And return on assets and return on equity actually is looking better. -40, -43 average, and they're at -26, which is actually an improvement. I'm going to give half credit there because they have been significantly improving it over the past few years compared to the 40 average. So looks okay there. And then long-term debt to total equity, obviously they have no debt, so they get the credit there as well. So overall, honestly, performed better than sort of expected at a 29%. So not terrible, but again, you just have to consider with this is very similar to Rocket Lab, where I actually got a comment about Rocket Lab saying they were developing one of the most influential high technology rockets in the world. And that is what convinced me to now go more into the company, go into their earnings reports, go into their charts, things like that, and just mention things like, hey, they're making possibly future fuel technology for nuclear reactors, which is most likely the energy of the future anyway. So this company has a massive amount of upside. Very similar to SolarEdge, very similar to Rocket Lab, where these companies will be seeing. I don't know so much about Altimmune, to be fair, but SolarEdge, Lightbridge, and Rocket Lab, all massive upside. Not DJT, just to be clear. Not that one either, but it's more about what they are developing than their actual financial rating. So that's just something to think about. But anyway, let's get into their recent earnings report and see what is actually said. So I'm hoping there is something here. There actually might not be because of how small of a company it is. And you can see it's actually taking a bit longer to load, but provides third quarter financial results. Let's hope that there's something interesting here. So we are proud to be developing advanced nuclear fuel that enhances safety and improves efficiency of existing reactors and water-cooled reactors. So I am actually going to mostly look for forward-looking statements. I know it says forward-looking statements right there, but I am looking to see if there's any 2025 guidance possibly on here, which it does not look like there is, unfortunately. So overall, it looks like they're mostly just going over financials here. I was hoping to see some future guidance. Doesn't look like there is. Possibly some stats here. Really just cash. But overall, it looks like we're not going to get too much information. You would probably have to go into the actual earnings report and look around, which I do not have enough time to do, unfortunately. But let's check out their chart. So you can see a couple weeks ago, they had a 121% gain in 1 week, followed by another gain of basically another 100%, which unfortunately they came down from. Now they're right around the midpoint of where that initial jump up was. You can see their long-term has been very, very shaky, coming off of a massive amount of stock movement over the past basically 25 years or so. So unfortunately, you can see kind of where the stock dilution and bankrolling using stock sales came into play. So they started off very, very high, took a huge dip, and now they have been essentially in what I'm going to assume is a research and development phase over the past many, many years. So hopefully they're able to come out of this at some point. I mean, with all of the billions of millions of dollars they're spending on research and development, hopefully they can make something out of that in the future. I mean, they are still listed on the NASDAQ, so there has to be something there, considering they've been in business for 25 years. So hopefully we see some further growth in the future, maybe some actual significant value added to the company, but we will have to see when the time comes. That is all I have for Lightbridge. Hope you learned something. Hope you enjoyed. Make sure to subscribe if you haven't, and I will see you next time.